The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome, everybody, to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist. And I have a very timely video today because we've got two movers and shakers that made it to my screen. The first one, as you can already see, is Amazon.com, and that's AMZN is the ticker. This is Zacks Rank 2. You know, a lot of times we do ones, but we do twos too. So it's a Zacks Rank 2. It's a buy. We call that ranked ones or strong buys, but twos are buys. So it has an A for growth and a D for value, and that's normally just what I love to see. But as you can see right here from our little earnings calendar, the company will report earnings tonight after the close. So just a very short turnaround here on this one. But I felt it was worthwhile to take a peek at this one because a lot of things are going on. First, let's go over the estimates and like why this stock made it to my radar screen. This quarter, the Zacks number here, we're looking at 461, and it's held steady. Whoa, unlike my ability to draw a circle. It's held steady for the last little while. But you can see the next quarter came in a little bit, bounced back up, bounced back down. But the full year number is what's important here, and that's more important to the Zacks rank, and you can see that it has moved higher. The next year, though, really inside the window of the Zacks rank, which goes only 60 days from the 3907, it has gone higher as well. So we see estimates moving higher. We also see a great history of beating the number, beating the number, beating the number, beating the number. All of those beats the last 4 times, they average out to 88% positive earnings surprises. So we like to see that. So the knock on Amazon has always been the valuation, and like, 71 times forward earnings. But that number is way down from almost a 1,500 multiple not too long ago. Growth is still looking great, in the 20+% zone. And we see the price to sales at 4 times. The price of book a little bit rich, but this is an asset light business, as they say, except for the some parts of it. But overall margins here, and I think this is kind of the idea of what we're seeing here. We're seeing big moves higher in the operating margins, and then a good size moves here in the net margins. That drives your stock price higher. And let's take a look at that stock price over the last few years. We can see that it's scaled up higher here, and it's moved along. Had a little dip in that fourth quarter here, but has come back. And we're back to just over 1,900 right now, and we're testing those highs. And the earnings, the earnings picture for Amazon hasn't really been the thing that has really driven the stock. Instead, I believe it's the sales number. So we can take a look at this. These are the fundamental charts, and let me show you where that is. You can get that if you come down to charts over here on your side right there, fundamental charts, and then you can change it from, I have it here for revenue and price. And price is going to be the squiggly line. Revenue is going to be only quarterly coming in. This quarter, we're expecting just about $60 billion in revenue. So this line comes in, but it always does from fourth quarter to first quarter. We've seen that in the past over those stretches. But you can see anytime that the stock price has gone underneath the revenue thing, it's worked out if that was your time at which you bought it. So that would be there. Technically it could be here, here, but definitely here. If you would have bought it there, I think you're pretty happy because you'd be buying in the 1700s, thereabouts. It's 1900. So look for that stock to continue its winning ways. Let's face it, it is Amazon. I see more packages being delivered, not less, and more people are relying on Amazon. So very timely. Tonight is earnings. Just about 60 billion on top, and 461 is the Zacks number. I'm seeing the S&P wanting 466, so just a little disparity there between our consensus and the regular number. But still something good to look at. Keep on your radar screen, Amazon. Next one, I've got Zayo Group. And this is also a super timely thing because this stock is down right now. Oh, boy, it's down a dollar. So that's about 3%. It was down earlier today. The day low, we can see that right here, is 28.17. So let's try to block that in. So that's a lot lower. That's fully 250 below where it was. We are it's got a Zacks rank. It's ZAYO is your ticker. It's a Zacks rank 2, and that gives it a buy. But it has the opposite of the divergence that I love to see. I love to see a strong growth score and a weak value score. Instead, this time I got a good value and a weak growth. But why is that? What's going on, Brian? Why would you tell us about a value play when we're all about growth here? And, so first let's see, the estimates are looking better. A little bit of a downward move there, but nothing bad, but good growth here. And then kind of hit or miss on earnings and a little bit more miss. A good one there. Good report right there. But that averages out to a nice number. So that keeps our rank profile in line. Here's our valuation, and here's a little bit of the trouble here for this and why we can see why this isn't always on my screen except for today. But down, growth contraction, revenue contraction, not a good thing. And it's amazing that this price to sales isn't a little bit lower. But this PE is big PE, and a good size number there. You see margins moving the wrong way there. All right, Brian, are you going to get to it? Why are we talking about a stock like this when growth is the name of the game, and this one isn't showing too much growth? Well, it's right around here, right about here, that a private equity, it came out that private equity was interested in buying this company when it was trading around 25, and stock shoots right up to 30 plus, 32, right around there. And they say that the target price was right in that 38 range. And the deal was very short. It was coming very soon, or at least that's what we heard. Today, the stock is down quite a bit, as I think we saw that before, right? I mean, the stock is down, a dollar. It's coming back here, obviously, a little bit as I'm talking, because that's what happens when you're trying to do things in the real time. But the idea is, why did this happen? Well, why did it dump down to $28? Well, it signed up for a conference in June or so, and the idea was this M&A was going to occur sooner rather than later. So going to a conference would mean that, boy, oh boy, there isn't going to be a deal, and the thing just fell apart just all of a sudden, and that's what can happen. Now, just because they've scheduled a conference doesn't mean that they are going to go to the conference. The idea here could be that when they decide to terminate that appearance, that's your heads up for when a potential buyout is coming. And if it doesn't happen in the next couple weeks, then expect that conference to hit and the stock to retreat back to the 29, maybe even 28 range again. Well, that's it for this week. 2 timely names for your Zacks, for your aggressive growth stock radar. Join us again next time when we preview 2 more stocks. And both of those next time will have good growth and value divergences, and that means a good growth score, bad value score. All right, we'll see you again next time.